Hi everyone, it's Brenda Brosnan from Summit Funding, and these are your mortgage minutes. Today I want to talk about VA loans and help you understand what is different and important to know when you're out in the field, either accepting a VA buyer's offer when you're representing the seller or when you're out showing homes to a VA buyer. We always use debt to income ratio when qualifying anyone for a mortgage. On a VA loan, there is a second way that we must calculate income. A lot of lending institutions and big banks do not go into this when they're doing the 5-minute over the phone pre-approval. So it's critical. If you're going to accept an offer on a VA buyer, as you represent a seller, or if you're out driving a VA buyer all around town for, showing them 15 and 20 houses, you really want to make sure that they are pre-approved with a reputable, excellent, experienced team, because the VA pre-approval can get botched up on a whim if it's not done accurately. So one of the things we calculate aside from the standard debt to income ratio is what we call residual income. Residual income is us having to take a proposed square footage of a new home that they might buy. Sounds funny, but it's true. And there's a chart we have to use with taxes and maintenance fees. And we have to take that into consideration with the other obligations they have and their income. And one thing that a lot of people don't know is that we also have to document the cost of childcare. So all of that goes into calculating, and they are required to have a certain amount of income left over for living when they're done paying their obligations and this proposed taxes and maintenance with the chart, with the square footage that we look at. And that is part of a standard VA loan approval. So what we do on the Brosnan team is we actually get this documentation and we pre-approve them properly up front. We have helped hundreds and hundreds of families on my team with their VA loan and have never had one declined or botched up. Not one ever in 20 years. And we've helped hundreds and hundreds of VA buyers. So the other thing that's really important for you to know is that if your buyer is buying a if your buyer is buying a condo, a normal condo, it must be VA approved, okay? Secondly, they have to have a site condo approved as well if they want to buy a site condominium. A site condo with a lot of lenders, they don't even treat it as a single family home. Here at Summit Funding, we treat a site condo as a single family home. There is no additional documentation such as master deed, bylaws, nothing. We don't need any of the condo documents for a site condominium. On a VA loan, it's different. You got to have the VA approve the entire site condominium development, even though a home looks like a single family home and the buyer owns the lot like in a regular single family home situation. We have successfully helped many families get a site condominium approved in the time frame of closing if we're given about 20 days or 25 days to do so. We've done it successfully here, and it's something we can do. I hope this helps. Again, when you are showing a VA buyer homes, please make sure they're pre-approved with a great lending team so you know that you're not wasting your time and they're going to get their loan closed on time as promised. And if you're representing a seller, you might consider having the buyer get pre-approved by a reputable team. Please consider us. We'd love to help you. Have a great week.